Just had to grab a coffee and yell at my wife for not training our dogs well. I go and get ice at a ice dispenser in the fridge, and they go crazy and like fly down the stairs and run over. Someone's got. Oh, maybe that's me. Hold on. No, it's not me. I don't hear a loop, but somebody might have.
Oh, okay, never mind.
Okay. Yeah, I hit the ice dispenser on the fridge, and then my dogs run at like 1 billion miles an hour to me. And my wife's like, no, give them one. I'm like, no, because you taught them that when they hear the ice thing on the fridge, then they come flying. So say we have like friends over, someone's here, they're going to have like this dog fly into their leg at like 80 miles an hour because they go to get an ice cube. No. Can't.
Dude, I swear. I had a dog do the same shit. That's funny as fuck.
I mean, you got to train your dog. Like, I'm strict, and I train my dogs well. My old dog, she died, but she was trained so well. I could say down stay, and she wouldn't move for an hour until I told her she was free. She would just stay in the exact same spot. I got her all night. I got her
was a fucking idiot.
up to 45 minutes.
Sorry, I was letting you talk.
No, go ahead.
Mine was like a mentally retarded miniature schnauzer, and like this thing, like every time I took a bath or every time that it heard ice cubes and shit, it just started fucking hauling ass, and it was the stupidest shit like I've ever seen. Like it would just go to my mom, and I'm just like, what the fuck, dude? Like this shit makes no sense.
Yeah, it's really funny. Yeah, they got these random things. One of my dogs just started. Let me get these charts up. One of my dogs just started kicking like after she poos or pees doesn't matter. She starts like kicking as if she's covering it with dirt or whatever, like she's outside, but she pees on pads. So she just does it it could be on the wood floor, on the rug. And the other thing she does is she buries everything. And I don't know where dogs get this from. It's just this. It's obviously it's an innate instinct, but like she'll bury like little pieces of bones under certain like couch cushions and shit for like weeks, and then go know exactly where they are when she's ready. It's so crazy. She's just so weird. We got her as a puppy, and she lives in the house. She's barely ever outside. They're like house dogs. We just started taking them outside to teach them to go outside, so we don't have to use pads and stuff. And but they got these weird, so it's kind of funny.
My dog was literally mentally retarded. She had to use the fucking pads and shit, and like that's it, bro. That was the end of the story.
People are saying they can't connect to the stream from Twitter. I'm posting another link, but I don't think that that's true.
Yeah, I mean, everything seems to be A-okay. They might be fucking out.
Yeah, I don't know. It looks fine. All right, we're live. Let's see. Knowles just tweeted. All right. Well, this is. I just wanted to do a public one just to go over BTC real quick, and then we'll do a stream for the group later. But for BTC, I wasn't sure what to make of it because there's some bullish and bearish signals, right? So I just looked at this morning, and for those who aren't in the private group who wouldn't know this, or I guess you saw me complain about it on Twitter, but my charts keep getting wiped out by TradingView. Although, so like everything from like the 27th on.
Hey, by the way, Vader, I figured out something to save those. There's actually an icon. Do you use Binance or do you use actual trading? Well, you use TradingView.
Yeah, I use TradingView.
Okay, you see that icon to the left on the bottom that has it's like a lock? Basically, that will actually save your drawings. I figured that out.
No, that's not what it is.
Oh, fuck.
It's the problem. It's the problem because I have multiple tabs open. So if I have this tab open, that's one chart layout. This tab opens another chart layout. If I save ONT here, whatever the BTC chart is on this tab will overwrite the BTC chart on this tab. But I found a workaround for it. I think I'm pretty sure I found a workaround for it. So whichever the last one is, you saved. But I think I fixed it. I might have found a workaround on the last lost disaster. Yeah, so this chart was still here because I drew this on the 20th, and it came to fruition perfectly. I was bragging about it on Twitter, so people have probably seen it who aren't in our group. In the private group have probably noticed where I was and bragging about it a little bit. So we had drawn this back at, I don't even know, back here at around wave 2. And everything was flawless from over the following week and a half, 2 weeks. Probably the best BTC chart I've ever come up with. And usually I don't analyze BTC as well. One of the reasons why, just to quickly run back, to look at what BTC's been doing. So for those, I did a public stream actually a while ago because I wanted to demo my Ichima model that we trade with, my 55.99 EMA strategy and everything, and I might have actually gone over it with Bitcoin. So with Bitcoin specifically, when my EMA model crosses over, it generally doesn't just happen and then go right back. So if you look at certain alts, when you have a 55 and 99 hour EMA, you'll get a lot of dancing EMAs. They won't cross over, they will cross over, they get really close, they go across, and then they come right back again, like they are right here. It crossed over, and then it came right back. I'm not really sure where that's going to go. With Bitcoin, I predicted this entire run, and the reason I was able to get into all those plays and all those alts that I called after was because I knew that Bitcoin was going to go short-term bullish. And the way I knew that was because of the EMA crossover here, as well as the bullish divergence that we had here, along with some other indicators and Ichimoku, but generally the main indicator was the EMAs. So with the 55 and 99 EMAs, this entire bear trend, 55 is on the bottom, 55 is on the bottom, 55 is on the bottom, 55 is on the top while it was going up, 55 was on the top, 55 was on the top, 55 was on the bottom while we were going down. This is short for Bitcoin. Usually crossovers last longer than this, so the trend would last longer, but still crossed over here, crossed back over here when it was going back up. Over here, this little bull run, and then this entire bear trend, it had crossed over. So these are like the shortest ones. Like this is another really short one. Besides that, generally speaking, these are really, really long and extended on BTC, and it's super rare that you get like a brief crossover and then it goes right back. Especially when they start diverging, when they cross and then they start moving away from each other that rapidly, that's usually a signal that it's going to be a more extended bull run. And you can see this entire bear trend, 55 is on the bottom. This entire big bull run up, 55 is on the top, and once you get this massive bull run up, 55 on the top the entire time from start to finish. If you bought down here when it crossed over, even if you bought at the top of this candle at 7,800, you would have ridden it all the way up to essentially, if you sold back down here when they converged, you would have made $1,200 on each Bitcoin. But you don't trade just on the EMAs anyway. I tell people not to you don't sell when it crosses over bearish and then buy when it crosses. It's not that simple. It's not just like it's a buy and a sell indicator, because sometimes this can happen. Sometimes you'll get this crossover. If you were to buy right here and then sell on the bearish crossover, you would have taken a loss. That's very rare with Bitcoin, where it crosses over and doesn't hold. And that's my point. That's like the only time on here. And then there was one more. I think it was, no, this crossover, this one right here. So those are really the only two going back a few months on Bitcoin where it crossed over very briefly. Alts do that all the time. Bitcoin essentially never does. So I spotted that crossover down here, and it was rapidly diverging. It was looking bullish. It was bullish divergence. Ichimoku was trending up. RSI was trending up. Everything about this scenario looked bullish. I called it. We charted it. We played it. We played a ton of alts in that period, and members of the group and myself did very well for this last run. Better than most people. That's why I'm so adamant that even if you don't want to join a paid group, find a free group. Just find somebody to teach you some of these tools so you can use them. Because if you have these tools in your arsenal, you're not going to be looking for people's signals. You're not going to be looking at what people say on Twitter. You're not going to give a crap what people say on Twitter. Because you're going to know what's happening before they do in most cases. And in this case, we knew exactly what was going to happen 2 weeks in advance. Obviously, we didn't know for sure. It's just a probability game. I could be wrong at any given point in time. We all can. But it was a very good indicator. At one point over here, I was thinking maybe I was wrong. Maybe we are going to cross back over and go bearish. And I even at one point right here, right after wave 2, tweeted, maybe I was wrong. This might be turning bearish. I'm about 80% sure that we're turning bearish, but then we never did. I didn't get out of any plays there because of my trading model and my strategy. I don't ever sell anything. I just set stop losses, and I adjust those stop losses based on my analysis. So in that situation, I had stop losses that were relatively tight. And if I was right when I said I was 80% sure we were going down, and we did go down, I would have gotten stopped out of everything. And I was only in USDT paired trading pairs. So with EOS and Nulls and VET paired with USDT with the stop loss, if I get stopped out, I'm back in Tether. My money's safe. I don't care if Bitcoin goes down 20%. My money's already in Tether. I don't have to go and sell to Tether or anything like that. So I was pretty sure that we were going to go down at that point, and then I ended up being wrong. I was like 80% sure. We ended up pulling away. We got back to the point where the EMAs was diverging. They almost crossed over again, but they never quite got there. They stayed bullish with the 55 on top right here. And then it curved up, and they started diverging again, moving away from each other, increasing in impulsiveness, and they've been going up ever since. We dipped back below the EMAs at one point, but never far enough to break this uptrend on the bottom of that wedge. So, in any case, this entire time I've been very bullish on BTC, with the exception of a couple instances where it tricked me up a little bit. So now moving forward, I'm still bullish on the fact that the EMAs look so bullish because my strategy is so reliable. However, there are certain things that are concerning. I don't like this rising wedge. I really love playing falling wedges for breakouts. I'm really good with breakout calls, mainly because I'm good at spotting bullish divergence. I'm good at identifying geometric shapes. I'm good at identifying patterns. I just kind of see them. Members of the group in our private group know we'll do live streams, and like I'll just draw stuff and nobody even knows what I see yet, and then it sort of like makes a picture after the fact. I don't need the lines on the screen. I just I stare at charts so often, and you guys will get used to this too the more you do TA. I stare at these things so freaking often that my mind just fills it in. Like I look at a blank chart and my mind just fills in like every support and resistance that you have, and I could probably, in most cases, I could tell you like if you did a retracement from here to here exactly, pretty damn close to exactly where a 786 retracement would be, where the 382 retracement would be, if I just know the starting and ending point. Because again, I just do this so often, your mind just sort of gets used to it. It's like training a muscle. So in any case, I'm good at spotting that sort of stuff. In addition to falling wedges, which are great for calling breakouts, I have an issue with rising wedges, which are similarly great at predicting drops. And on BTC, there's a lot of instances where that's the case in the past. We don't have to go too far back now. Maybe we can with the group in our later stream, because I wanted to go over a bunch of alts with you guys too, so we could possibly make some money depending on what happens. So this is the conflicting stuff I'm seeing here. Short term on the hourly, it's a little bit of a bull flag. Not very pronounced, but it's more of a pennant, if anything. So it's a symmetrical triangle pretty much. So somebody asked in the group if that was a bull flag. Could you make the argument that that's a bull flag, or a bullish pennant rather? You probably could. I see a symmetrical triangle there, which could really break either way. So at least for our purposes here, it's not that pertinent. I'm more concerned about this larger rising wedge. So I had us going essentially, in theory, my max of wave 5 was 74 and change, and it used to be over here. And then after my charts got erased and I moved it over. But it kind of did hit perfectly right here. We ended up being maybe like $70 shy of what my original target was. You probably could make the argument, hey, that was the end of your target. That was the end of that impulse wave, and now we're correcting. But I'm not really sure about that. We have a ton of support from the EMAs, and we have a bunch of other supports on the way down too. I mean, we dipped through this support for a minute, but for the most part it held. This wedge here goes back from when we started this run, and we've been getting higher lows and lower highs ever since. Well, not lower highs, but relative, because it's a wedge, it's not a falling trend on the top. It's still rising, but the spread essentially between highs and lows has been decreasing, which forms a wedge shape. They get tighter together, and the top and bottoms of that wedge converge, and that creates a rising wedge in this case because we're moving up. So bearish indicator there. There's some bearish divergence here on the RSI, which is pretty easy as hell to spot. You'll notice, well, you could say there's hidden bullish, but I don't believe that ever trumps bearish divergence. So yeah, it's kind of mixing. You're seeing like hidden bullish, but then bearish divergence. And then you have the rising wedge, which is a bearish indicator. And then we don't actually have like a real resistance of mine until I had it at 76, 79. I thought that might be the top of this run before we stop and correct. So I'm not really sure what to make of it. Short term, we have a pennant forming, getting pretty well formed. We can look at different time frames too. And then the other question is, how much can Wave 5 really do exceeding what Wave 1 did? That's already more than a 1-to-1 extension right there. Not that it really matters too much, but no, it's approaching it. So yeah, a 1-to-1 extension would actually put Wave 5 really, really close to that support, which is now a resistance. I've had that on this thing since it used to be a support. All right, take a look at different time frames. I'm trying to work this out with you guys. I have no idea. I didn't like prep for this and say like, oh, I'm gonna do a stream and tell everybody what I see. All I did was I woke up, got a cup of coffee, looked at this, and I was like, oh, there's a wedge there. All right, well, let's do a stream and see if we can figure it out together. Let's see. Anybody in the chat have any ideas? You only use it on 1 hour. Yeah, so my EMA model I use on 1 hour. It works on others, but not really. It's designed around the 1 hour. I pretty much worked with 1 hour charts with the 55 and a 61 and a 72 and an 84. Every EMA you can imagine. I use moving averages, exponential moving averages, which I use for a very specific reason. So having it on a very specific time frame makes it easier. And then if I need to dive into different time frames, there's other strategies to use. But mostly I just use the hourly. Is there anybody who sees anything that maybe I don't see? Because I would really like to figure out what the hell is going on here. I don't use TD sequential. That's what's his name's thing, right? DeMarco or something. Is that his name? I read something about him. Tony DeMarco or some shit. Yeah, I mean, I wouldn't. So this is, it's not really a no trade zone, right? Because based on my strategy, if you guys aren't familiar, you don't have to sell out of positions that you're in. Just set stop losses. If it drops, because we're not really certain, you get stopped out. You're back in tether, and your money's safe. If it goes up, you just made free money, because if you had sold in the first place, you would have missed out on that opportunity. Then you just move up your stop losses, and you're done. So there's supports on the way down, kind of. The top of that triangle that we broke through, this triangle that I had drawn, weeks out, is a support. So there's a support at 71.58. This, even though we dipped through this support here, it's not, I wouldn't consider this a major support anymore, but it still gave us some resistance. Even on the way up, we had a tough time breaking through it. So I think that's still a partial support. It's just not, I wouldn't consider that to be a major support by any stretch anymore. And you know what we should probably do? Let me do a fresh, now we're on the 4 hour. Let me do a fresh fib retracement on this last drop just to see. Oh, wait, I already have it. I'll just extend it out. See where that lines up with the current price action. Actually lock this again so it doesn't move around the screen. So this particular fib retracement's pretty good. You'll see, let's see, the 236, there's a lot of ranging around there, so that's good. The 0.5 matches up pretty damn well with the top of that triangle formation where we kept catching all that support, or we kept catching all that resistance. 1, 2, 3, 4, 5, 6, 7, 8, 9 hourly candles, or 4 hour candles rather. You dive down to the hourly, you'll probably get 2 for each one of these. A ton of resistance right at that 0.5 fib. The 618 would be hard to get above. But the 0.5, that's definitely the major support, and we're riding it right now. So it's a very easy play. If you place your stop loss 3.25% here, if you were trading BTC, if you place a stop loss a couple percent below that support, 1.5% below that support, it's a pretty safe bet. I mean, if it breaks that support and goes down, chances are you're going to keep going down. You might catch support at some of my dynamic supports, like the EMAs, although Bitcoin doesn't give you as much dynamic support. I have with my model, I call there's 4 dynamic supports with Ichima, so there's Ichimoku, and then I have my 2 EMAs. There's 4 lines which combine to create 4 dynamic supports. So if with Bitcoin you don't get as much support from those just because the trends are too strong and the volume's too large, it's too liquid. With alts, you get tremendous support with those. That's responsible for half of our plays that we do in the group. But so if it were to fall, you'd have some support there. If it breaks through, chances are it'll keep going a bit lower. So getting stopped out right below that support would be a safe bet. But if it happens to break up, and I happen to be wrong, and maybe it breaks up and creates a new top to this wedge, and it gets above the 618, say it goes on a run to my original target resistance of 75 to 76.50 around there, then you could just move your stop loss up, and then your stop loss is higher than the price you would have sold at in the first place. So you've just locked in and guaranteed yourself more profit from being right just one time, instead of selling, and then being pissed because you missed out on a potential run up. So yeah, the 4 hour, there's really nothing that's like, it doesn't clear anything up. Maybe I can go down to lower time frames and see short term if maybe we can see more. I also kind of ignored this big wick, which I do a lot because that annoys me when there's just like one unrealistic candle that's clearly not organic trading. That's not the general public just placing orders on Coinbase. That's just some huge whale placing a huge order, which caused it to briefly pump. So for that to completely invalidate this otherwise flawless wedge is ridiculous. So I'm not going to invalidate it because of that wick. Let me see what other questions people have too. And then I'll look at some other time frames real quick. See 1-to-1. So yeah, 1-to-1 C would be pretty close to what I already had originally. So that's why if we do, we'd have to break that 618. But we could go back in time and see if that's 74.90 level. I have a feeling 7,500. If I specifically thought of that as a potential max, I'm pretty sure that's going to be. If we go back, we're going to see that 7,500 was a strong support because that number wouldn't be in my head if that wasn't the case. What other questions? Top of wave 3 to latest time each of Yeah, there is bear divergence. It looks like a ridiculous thing here. It looks like I just drew this in the middle of nowhere, but on the hourly, there's clearly bear divergence there on the RSI. We go down to 4,700. 4,750 is my number. I still think we go down to possibly under 4,000, but I won't specify that till we get closer. Just 20-second. I'm not going in the whole long extended thing, but I've talked about this with our private group a lot. I have this analogy which works really well. Anybody familiar with hurricanes when they forecast hurricanes? There's a hurricane barreling towards Florida, and they give you this cone of uncertainty, and then they call them spaghetti models with these lines that go everywhere on the screen. Based on that cone, 5 days out, they could tell you it's going to hit Texas or Florida or North Carolina. 3 days out, they can tell you it's going to hit Florida. 2 days out, southern Florida. 1 day out, Miami. As you get closer, that cone gets tighter, and as that cone gets tighter, there's more data being fed into it. TA is the exact same way. I happened to spot this spot on 2 weeks in advance for BTC, but that was half luck. I'm not going to take credit for that entirely. It was good TA, but a lot of it was luck. I just sort of happened to, things just sort of went right. Generally speaking, when you're that far out, you really can't be that accurate. So I'll never say, the bottom of Bitcoin is $3,914. It's going to happen on this date. It's just not possible. As a joke, I'll say it. I'll say it fucking around and, we'll laugh about it, and one day if I end up being right, I'll brag about it, even though it's pretty obvious that it was a joke. But anyway, that's why you really can't predict it that far out. I have a cone of uncertainty. My cone of uncertainty is 3 to 4K as the absolute bottom. That $1,000 range is pretty much the closest I can get right now, and I'll adjust that as we progress and get down there. Once we get down to like 5,000, I'll have a much better idea. I haven't really looked at the weekly chart, but I will. I'll take a look at it with you. I never really trade at that time frame, to be honest. The only time I do is when I'm showing people, trying to like demonstrate how insignificant this correction is, how past corrections have been far more substantial. So I don't have my Vader voice box. I don't use Bollinger Bands anymore. I used to, but it just clutters up my screen. I don't have enough indicators in TradingView to even do it. I had to cut out other stuff. I used to use stochastic on every trade, but now I don't. I pull it up when I need it, when I need more info. I just use Ichimoku for three things. Leading span A and leading span B are two of my dynamic supports to go with my two EMAs, so the top and the bottom of the cloud. And the simple fact that when you cross the cloud, there's like an 88% probability that you're going to go to the other side of it. Now look at some of the lower time frames. I just want to see what I see like really short term. So maybe I can get a better shot of this potential pennant forming right now. It's not really. That would need to form a little longer. If that consolidates longer, it could be an opportunity to break out from there. But again, it still would have the resistance from the top of this wedge. I really think this wedge is not a good sign. Now, we could theoretically consolidate in that wedge. We can apex and ride that thing until it reaches a point, potentially. So that doesn't mean that it necessarily has to come down. So to be fair, when I say I see, bullish and bearish signs, I see bearish divergence. But there's some bullish signs too. There's the EMAs, which are still diverging and still look like they're very strong. It still shows that there's a strong trend there, that it's keeping up. Volume hasn't dropped off. It hasn't been great, but it hasn't dropped off any significant amount. So we could potentially keep going up, moving up a little bit through this wedge. So I'm not necessarily saying we're going to completely plummet immediately, but this wedge is pretty much a confirmation of what I originally thought, which is we're going to max out 74 to 76 somewhere, and then we're going to go down hard. And I'm pretty damn sure about that. I'll be very, very surprised if some people were like, oh, we're going to go up to 8,000. I'll be absolutely astonished, blown away if we got up that high. But when you're down to this level, at this time frame, you could actually see that this wedge, it's really not that tight. There's a lot of room to move. I mean, in theory, if you extended this, assuming that that's like, say that's the top of this trend, right, is that wedge, ignoring that one pump candle, we could potentially ride this same... we could ride that up to my original target, 75 to 76, 50, whatever, 74 to 76, somewhere in there, mid sevens, whatever. I don't remember. I keep changing it. So this 1-to-1 at 76.23 is really close to my original target, and that would be a 1-to-1 extension of wave 1 from this run. And this Elliott wave count has been perfect. And I don't care if you don't like Elliott wave, it's irrelevant. You can erase Elliott wave from this chart and the data would be identical, because when you're using Elliott wave, you're really using Fibonacci. Elliott wave is just a visual tool to be able to represent what you're looking at easily with lines connecting those points instead of just going from Fibonacci level to a different Fibonacci level. It gives you a way to visualize it, to better understand it, to process it in your mind. But it's been very accurate. Fibonacci ranging and trading at those levels, support and resistance from Fib levels have been on point. Targets have been on point from Fib levels, whether it's the 0.5 here, or wherever else. Where was that? All that other stuff ranging. All those supports from the 236. I don't think I have any short-term ones, but yeah, here, same thing here. That support and resistance was right at a Fib level. This support and resistance right at a Fib level, which of course caused all that commotion. Same thing up here. So we're getting a lot of range trading right around those major Fib levels. So I would say at this point, here's what I'm thinking. The fact that, where's that? This 618 is going to be hard. It's going to be hard to get up there. but we can. There's no reason why we can't. It's just a matter of when we fall. My feeling now is that we're going to fall. We're going to fall hard. I just don't know exactly when. So at this point, I would urge cautious trading. If you want to enter some trades, that's fine. Just make sure you have a stop loss. If you're getting into any alt plays, I would only trade USDT pairings right now. I would not flirt with anything paired with BTC or ETH or anything. And for those who don't understand why, I explained it earlier, but if you have nulls paired with BTC, and then everything comes down, BTC comes down 20%, nulls comes down 20%, everything just takes a huge hit. Your stop loss is going to stop you into BTC, which is also going down. It's not going to be going down as much as nulls. It might go down 7% when nulls goes down 20%, but it's still going to be going down. But if you have nulls paired with USDT, the second the market corrects, you get stopped out of nulls and your money's back in Tether. So instead of rushing to sell your Bitcoin to Tether as quickly as you can, you already have your money in Tether, so your money's safe. And when you have any uncertainty in the market, if you're not sure if it's going to go up or down, and right now, I think we're going to go up a little bit more, and then we're going to come down hard. I don't have a time frame on it. I don't know exactly when that's going to happen, but I'm pretty sure that's what's going to play out. So I would only stick to USDT pairs for that reason. We're actually right at some really strong support, 2 dynamic supports. Leading span A of the Ichimoku cloud, so the top of the cloud, plus a 55 EMA. So doubled up on dynamic supports. But like I said before, with we don't get that same level of support with Bitcoin. We do a little bit, bounce off. The crossovers are more relevant, not for support with the EMA model. Some of these other ones, like if you look at, I feel like going through all these because it's depressing because all my charts are gone. You'll find there's periods during runs where there's like a ton of support or resistance off of either the 55 or the 99. This entire way down, the 55 is just demolishing ONT. It could not break the 55 because that's my perfect support, dynamic support resistance. And then when it does break through, then it'll get rejected by Ichimoku or it'll get rejected by the next EMA. With you'll get much more breakthrough on BTC than you do on alts, but it's still coming up on them, and that is kind of giving us a little push up and support. So we're going to keep going up a little bit longer. Another, at least, I don't like assigning time frames to it. Maybe like another day we could go up before we come down. I just don't see it going that much longer because it's going to keep consolidating within this wedge, and eventually it's going to correct. And when it does, it's going to be a hard one. Very hard. Very, very hard. I feel like that was an intro to a porno. All right. So, don't have any guarantees for you, but I'm pretty sure we're going to keep going up, and then we're going to correct, and that's why. And that's the best I have right now. If anybody else has been to... hey! No barking! Hey! Stop! No! Sorry, my wife was just barking. I mean, my dogs were just barking. Wow, she's still going. Okay. If anybody has any questions before we shut down? So I'm going to do a stream with the premium group so we can look at some altcoins and see what plays we can get into. But if anybody from the public has any questions real quick, you could type them or speak them to yourself. I won't be able to hear you, though. No, Tether's fine. Every single bank uses fractional banking. Tether's no different. If everybody tries to cash out their Tether at the same time, the last 40% of those people, 30% of those people might be fucked. I'll be in the first 2% of those people, and probably anybody who attended this stream and who follows half of the people we follow on Twitter, including myself, you'll get out of Tether pretty much immediately upon there being some sort of shitty news. It's very unlikely that you would get screwed over in any way whatsoever. No, I don't. I used to use BitMEX. That's how I made a lot of money in a short period. I was doing some leverage trading, and then I stopped because it was really risky. But I had to come back. I lost 50 grand. I needed a Hail Mary. That was my Hail Mary at the time. There's nothing else here, If you're holding Tether on an exchange, you just sell it. Just dump it. As long as everybody's not dumping it before you, there's no chance that they wouldn't have time to artificially pump up the price before it drops. You can switch. You know what? If Tether ever were to have a really big issue, you know what would happen? BTC would skyrocket. Because everybody would be buying BTC to get out of Tether. How often do you see people saying that if Tether ever had a problem, it would crash BTC? Do you not think about that? Is that not obvious? That if Tether, some news came out about Tether, everybody would dump right into BTC. The market would go up to $20,000. It would be insane. I don't understand why people think that, like, if Tether had an issue, it would somehow, like, destroy BTC. Short term, it would skyrocket BTC. And then as soon as that happens, TUSD would go up 50% because everybody would realize that they can move into that instead of BTC. Because now we have a new stable coin. The only reason why I use Tether as opposed to TUSD, which is just another stable coin, is because I can use stop losses because we have trading pairs. If Binance had TUSD trading pairs or fiat trading pairs, I would do that. Yeah, on a majority of exchanges, you would just have to dump into Bitcoin or Ethereum. It would skyrocket everything. I don't know why people. I don't get that. It seems like it's not a very big logical jump, right? It's pretty simple.
Yo.
Yo.
I'm sorry I was AFK. My girlfriend was annoying me. What just happened?
Nothing. It's just finishing up the public stream, and people were asking questions about Tether and stuff, so I was going through my spiel about it. We've talked about that a bunch. I don't know. I was telling them I don't understand why all these, like, everybody on Twitter says stuff like, oh, if Tether ever goes down, it's gonna crash Bitcoin or something.
Yeah,
I'm like,
they're talking. They just don't like trust fucking Arthur and thinks that BitMEX is just like a huge scam, which I mean it is, but like Tether is pretty fucking stable. I mean, and then
yeah.
said it's right either way. TUSD would save the day.
Yeah, but what I was telling everybody, which people don't realize, is that if some news came out about the liquidity of Tether, or there was, because it was illiquid, and there were all these issues, and everybody wanted to get out of Tether, everybody who's on an exchange who's holding Tether wouldn't have a choice but to buy BTC or Ethereum with that Tether, so the prices of those things would go up 500%. It would be nuts.
Yep, very true.
And Bitcoin would go up 100%. It would be nuts. It would be a frenzy. And then as soon as that happens, some of the people would move into TUSD, which is another stable coin, but there's no trading pairs with it, so you can't really hold it now. You can't do anything with it. It just sits there. I miss so much. I can't short. Don't then. I don't ever short. I short my own coins. Do you guys know what? So mostly the public people, because we've talked about this in the private group a lot. You guys know what shorting is, right? When you're shorting, you're going to an exchange and you're saying, hey, can I have one of your Bitcoin? I'm going to borrow it from you. I'm going to sell that Bitcoin right now because I'm positive it's going down to $6,000. Once it goes down to $6,000, since I sold it now for $7,200, I now have $7,200. Once it goes to $6,000, I'm going to buy that Bitcoin back and give you your same Bitcoin back to you. So I make, since I sold it for $7,200, I made $1,200 profit when it went down to $6,000. I bought it back. I now have $1,200 left over and the original Bitcoin that you lent me. So I'm going to give you that Bitcoin back that I borrowed from you, plus 10% of that $1,200 I made. Here's $120 plus your Bitcoin. Thanks for doing business with me. That's what shorting is. So if you're holding a variety of altcoins and you're confident that the market's going to go down, if you have 100 ABC coins and 100 XYZ coins, you can sell those coins. The price goes down 20%. You buy those coins back. And now you still have 100 ABC. You still have 100 XYZ, but you have that extra money left over. You don't have to give a percentage of that money to an exchange. It's your money. So you can short your own coins. If you want to bet against the market, you can do that with whatever you have yourself. You just can't exceed what you have because you're not trading on margin. When you're trading on margin, you're borrowing a much larger sum than you personally have. But if you don't have the collateral, it doesn't really matter anyway. You're going to end up going broke. So just don't trade on margin, and certainly don't leverage anything. Just mitigate risk. Don't take on absurd amounts of risk that you don't have to.
I agree with that, by the way. It's just another form of gambling.
Yep, it is. And people jump into it because it's like, oh, I can make 10 times my money. Yeah, but you're taking on 10 times the risk. You're crazy. That's the whole point. It's like,
casino, bro.
Yeah, it's like going to a casino and people being like, "Oh, I'm good at blackjack." It's like, no, you're better at math than you're. you're better at probability than when the odds are against you. The probability's not with you. You don't have a probable edge. You're going to lose. The best bet in the house isn't even in your favor. It's a pass line on a craps table. A pass line on the craps table, you have a 49.9% chance of winning. The house has a 50.1% chance of winning. That's the best play in the house at any casino is the pass line on a craps table, and you still don't have the odds.
Exactly. The house always wins. That's why it's a casino.
Yep. But if you just play craps, you have the best chance. If you learn how to play craps, it's an awesome game. I love playing craps. I made so much money playing craps. Silicone is 80% of the time shorting. Yeah, he's 80% of the time sucking at life, too, and being a horrible person. I don't care what Silicone does. Hope he loses everything.
So, let's see. I mean, just to say something, what do you think about this, the cloud right there that is obviously showing a lot of support, even though, that pennant's forming, the cloud below it is showing hella support, so even if it dips, I mean...
That's what I was saying before you came back. I think that short term, we can keep going up within this wedge, but this falling wedge is a sure sign we're correcting really hard. It's just a function of when.
I agree.
I think we have support from the bottom, just like we have resistance at the top. We have support from the bottom. I think we consolidate in this range until we just crash hard. We're going to take a big drop, a very big drop. We're not going to correct right to 4,000 like I've been saying for months and months and months, or like guys like Nas have been saying for months, or my boy, Crypto AMD. We've all been, and Josh, Bacon Chain, we've all been saying that we were going to head for a really deep correction. It's not like we're just going to go straight down. There's going to be bounces along the way. There's plenty of opportunities to make money throughout that process. The last big drop from 10,000 down, there were lots of opportunities where you could have caught a corrective wave that went up. Because just so you guys know, and again, I don't care if you don't like Elliott Wave, because you think it doesn't predict the future. It's not supposed to. It's probability. It's a visual way of representing, essentially trading Fibonacci is more or less what it is. It's a visual representation, so it's easier to sort of process it. But when you're going down, you know how when you're going up and you have 5 waves going up, when you're going down, it's the exact same thing. The only difference is those ABC corrections, it's still a corrective wave. It's still an ABC correction, but it's going up. So you can ride those plays all the time. If we're correcting, every single time we get one of those bounces and we run up, you can play alts. You can make 10, 20, 30% over the course of several days before we start going back down again. Sometimes it's short term. Sometimes in these instances, like because these are all ABCs as well, right? Every single corrective wave in that 5-wave impulse wave, each wave 2 and 4 are also ABCs. Just it's a fractal. It's just another level down. Each one of those is another chance to make money going up. And then the fractal in this, there's another 5 waves coming here. So there's 2 more. You have a lot of opportunities where you get bounces. So if you're good at finding supports, you can play those. And support and resistance, I say it all the time. Before you learn Elliott Wave or Fibonacci or Ichimoku or Bollinger Bands, any other indicator, focus on support and resistance. That's all you need to know. If you focus on support and resistance, you will cut your losses in half if you're taking hits because you'll know where to place stop losses right below strong supports because you can identify them. Then you build upon that and you add in other indicators, you learn new skills, you develop new trading strategies. But start with support and resistance. It's the most important thing you could possibly learn if you're new to TA or if you're new to trading or anything. You don't have to be an amazing analyst. All you need to do is be able to identify strong supports. Look at a chart and be like, all right, looking at this chart from right here, like your brain just needs to be able to fill it in like, whoa, look, there's all these opportunities where, all these times where, the price goes up and then it gets rejected, right at this level or right at this level. Here. Like, oh, look at that. This time, and this time, and this time, and all these, and this time, all these times, it gets rejected right at this line. Wow, this line going across the screen is really strong support or resistance. That's all it really takes at first, and then you kind of build upon that. If you need help learning it, obviously there's paid groups that do training like mine or other ones, but there's some free resources out there too if you're a cheap fuck. I'm just kidding. But I really do. My group, it's not that expensive. It's a couple dollars a day. It's $130 a month for the premium group, but you could ask if you join the public group if you ask any of the premium group members in the public group, I can say you can ask pretty much anyone in a DM where they're free to talk shit about me. I would be very surprised if anybody's unhappy just because nobody complains to me. And if they did, I would fix whatever they were unhappy with. I always tell people, as much constructive criticism as you can give me because I want to be as perfect as possible, but I work really hard at this and spend a ton of time on it because it really does matter to me. You guys really need to learn this stuff. Everybody does.
A lot of people don't want to put in the time, but it is obviously worth it. I mean, if you don't know fib retracement, Elliott waves, and support resistance, as you said, I mean, just what are you doing trading in crypto? Just like, what are you doing here? So, I mean, I know a lot of people don't believe in Elliott wave, but I mean, those are the biggest news in the fucking world. I mean, what the fuck?
Yep, it's concepts are not that hard, and once you take the time to understand what they are, it's pretty amazing what you can do with it. And it's also I don't know if you guys saw the tweet. I tweeted how good traders are good traders because they can identify self-fulfilling prophecies. Right? Think about that for a second. This is mostly for the people in the public stream. So, what's a self-fulfilling prophecy? Here's an example. We trade Fibonacci levels, right? So we see a Fibonacci level, hits a 618. We're going to bet that it's going to bounce off that, catch resistance, and go back down. Because we believe that's going to happen, the bots are programmed to trade based on that. And other guys just like me are making that exact same decision. If everybody starts selling at that level, the price is going to come down from that level. So because we believe it, it ends up coming to fruition. It's a self-fulfilling prophecy. We believe that it's going to happen. Therefore, our subsequent actions cause it to occur. And therefore, we believe it's going to happen. So that cycle happens over and over again with Fibonacci or Elliott wave, no matter what you're trading on. And you'll notice there's certain pairings that trade very heavily based on Fibonacci, certain pairings that trade a lot based on Elliott waves, certain pairings that seem to be bouncing off EMAs more than others. That's just because, in some cases, there are bots that are programmed to trade, and the guy who designed that bot, the analyst who programmed it, like if I programmed a bot, I would program a bot to look for bullish divergence, bearish divergence. I would program a bot to look for my EMAs and Ichimoku because I have my Ichima model and play those supports. If you ever looked at LTC USDT and I had my bot running on it and I was doing a lot of money and a lot of volume where I could actually affect the market, you would see a ton of support and resistance from those levels because as soon as it hit that level, I would be buying up or selling because my bot would be doing the way that I trade, the way I've programmed it. So it's the same exact thing, whether it's people or whether it's computer programs that are doing the trading. It's programmed by people who believe that it's going to happen a certain way. So those people and programs trade a certain way, therefore causing it to happen that way. So if you can identify those self-fulfilling prophecies, you can play them. That's what Fibonacci is. Is there any reason why in financial markets you should get resistance on price movement at the golden ratio at the 618 Fibonacci level? There's no logical reason whatsoever. It makes absolutely no sense.
I concur.
But it happens. Almost every time. It happens. And that's just because we agreed that it does happen. Therefore, we're going to trade that way. Therefore, it's going to happen. And around we go. Okay. That's good. Any other questions in the public stream? No, I will not make out with you.
He's married, bro.
I'm here to learn, everybody. Not to make on with you. Go on with your... I'm here to learn about chlorophyll, and you're trying to make out with me. I'm here to learn, everybody. Not to make out with you. Go on with the borophyll.
That's Billy Madison, right?
Yep. Damn straight.
Man, you got some good ones. I missed another one.
Jackie.
One of your jokes, and I didn't get it.
I like. And you buy Bitcoin, and it's good. And you get correction. Very nice. I like Ali G too. Why is a licky the one gaga? Hear me now. I'm here with no other than Donald Orange Man Trump.
Is that a Scottish dude?
No, he's British. Sacha Baron Cohen. He's a Jew too. One of my people. I never actually saw The Dictator. But he's hilarious. He's so funny.
So, dude, since the public isn't talking, what do you feel about this? How do you feel about this fucking obvious? I mean, to me, right? It's obvious. I don't know if it's so obvious to you because you're better. There's a lot of bearish exhaustion, and obviously a short squeeze leads to a pump, right? I sometimes, depending on how fat the short squeeze is, it's going to lead to a pump. So, how do you feel about that?
The last few short squeezes we had were pretty substantial pumps, especially one of the guys who was in our group who used to tell me I was great and then decided just to be a dick and start like trolling me, like tried to like put me on blast and be like, oh, in April there was a short squeeze and you didn't really know what to make of it. So clearly, you know what? I learned how to trade in January, bro. So fuck you. I didn't say I would been doing this for 10 years. I didn't know what to make of it in April. You're right. It's not embarrassing. I learned since April more than people who have been doing this for 10 years have learned in 10 years. So that's not embarrassing. That's something to be proud of. Anyway, but yeah, since then I have developed my skill set and I am able to identify those more. But in April, we had that major short squeeze, which is sort of what introduced me to the concept to the extent to which it can affect the market. And that was what really stopped us from correcting. But in this case, unless there's a short squeeze and we get a ton of buying just to fill those, unless those contracts are filled and that pushes up to 8,000, there's no way it's going to stop us from correcting. Is that what you're talking about? If it's going to somehow hold us out from correcting longer?
That's what I'm trying to say. It's going to be an unstoppable pump because the bears are fucking out of collateral to short more. You know what I'm saying?
It would have to get up to $8,000 to really stop us from correcting very, very soon. Because this.
Oh no, I meant the pump from the actual short squeeze itself. But I've been reading a lot of shit.
No, that's what I mean. If the short squeeze, when do those contracts all close? When are they all gonna have to close? When would that be?
Wait, what?
When would that? What time frame are you looking at? Like, when would that be?
It's difficult to say, to be honest with you, but I just know that it's happening. I know that there's a lot of, there's bearish exhaustion. They're literally fucking throwing all their money into shorting because that's all they fucking do is, and, obviously since we've been in a bear market for, since January or whatever the fuck, that's all they know how to fucking do, basically. So they're literally running out of money as we speak, shorting the shit out of Bitcoin, but it's going up. You know what I'm saying? So I expect there to be a sort of a pump. That's honestly my most valid reason for thinking that there's going to be a pump. But there's also other bullish indicators, but there's also bearish indicators. But
yeah, that's only going to happen if we don't drop soon, though. Because if we drop soon, then everybody who's shorted is going to end up banking. They're not going to get liquidated.
Yeah.
And it's,
I bank on the shorts. I mean, I'm bullish, obviously, but I mean, not bullish midterm and shit like that, but I'm bullish long term in general or whatever, and it just looks like a scenario that it could pump. I'm not saying it will. I'm just saying that fuck, it's literally lined up to do it.
Yeah, that's the beauty of how we trade. I honestly, neither of us really have any idea. We're speculating, but it's so easy because
we won't lose money anyway.
Yeah, so if it corrects, if it ends up correcting and we're right and we drop from this wedge and then we just correct from that point, then great. We get stopped out. We get to wait till the price is lower and buy back. And if the price does pump, we have stop losses and they're not going to hit. And then we're just going to make extra money and move our stop losses up. It's just win-win. It's ridiculously easy.
I'm already risk-free on all my trades, so, I mean, it's do your worst, motherfucker.
Yeah, I know. Come at me. What are you going to do? All right, we'll take a look at some alts. All right, that's it for the public stream. Thanks for coming by, guys. I appreciate it. Sorry I can't give you a more definitive answer on Bitcoin, but right now it's the best I can do. Probably still have a little bit more upward movement, maybe a day or two, but this wedge is pretty definitive to me. I'm pretty damn sure when I see rising wedges and falling wedges, my brain goes bonkers because those are my favorite formations to call drops and breakouts. And some of the best breakouts I've ever called have been based off of falling wedges. Just it's such a strong indication, and especially when you combine it with bullish divergence or bearish divergence, it's just piling on a confluence of indicators that just makes me more and more confident. So, be careful. Make sure you have stop losses, and if you need help with any of this stuff, you guys can DM me anytime, and I'll try to get back to you as quickly as I can. I respond to members of the group immediately if I'm not sleeping. But if you guys DM me on Twitter and you're not in the group, I'll still try to get back to you, just, not as quickly. All right, thanks for coming by. Later.